Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. UBS reports a big earnings beat in revenue, net income and profit. The Swiss lender saying it expects the merger with Credit Suisse to be completed at the end of May. We will bring you an interview with the UBS CEO, Sergio Motti, in an hour's time. Stocks in Asia follow the US higher on hopes the Fed will cut rates this year. The yen weakens against the dollar after Japan's FX chief says intervention isn't needed if markets are orderly. Plus, Israel rejects a ceasefire proposal backed by Hamas hours after the militant group agreed to the plan. Israel vowing to push ahead with military operations in Rafah. It is, of course, another big week on the earnings front. UBS coming through with that decent beat in terms of net income, in terms of revenue and profit. As we said, continuing to look, of course, in terms of the earnings call and the interview that we have with the CEO with any comments on those capital plans. We know, of course, that the Swiss government's plans around capital allocations and the requirements there are essential for this lender. But coming through with a big beat in terms of net revenue. We will start there. Net revenue for the first quarter for UBS coming in at $12.7 billion US dollars, decently above the estimates of $11.8 billion. In terms of net income, almost triple the estimates in the first quarter. $1.8 billion, just shy of $1.8 billion US dollars versus the estimates of just shy of $600 million US dollars. The investment banking business came through with a beat. Asset management was a modest miss in terms of pre-tax for asset management, but return on tangible equity for UBS in the first quarter was triple what was expected, 9%, an increase of 9% versus the estimates of 3%. Pre-tax profit, again, a very healthy beat coming through from UBS, $2.4 billion US dollars versus the estimates of just shy of $1.2 billion. And again, they expect the merger of UBS and Credit Suisse to complete on May the 31st. We will bring you a conversation with Sergio Motti, the UBS CEO, in just under an hour. That's 7 a.m. UK time on markets today. So stay tuned for that. On the earnings front, but over in Italy, UniCredit coming in. Top line, this is a redhead from this Italian lender, which, by the way, the stock is up 48% year to date. The redhead, first quarter net income coming in with a beat for UniCredit. 2.56 billion euros versus the estimates of 2.1 billion euros. So again, a decent beat coming through from UniCredit. We look for lines on net interest income, and there it is, 2.56 billion is the top line in terms of net income, net interest income, NII, also coming in with a beat, 3.58 billion above the estimates of 3.51 billion. So a modest beat in terms of net interest income. They are seeing as well in terms of the first quarter net fees and commission income coming in above the estimates as well, just above 2 billion. And again, in terms of first quarter revenue, healthily above the estimates, 6.4 billion. The estimates had been for just shy of 6 billion euros. And again, when we listen in on the call for UniCredit, the outlook for net interest income will be key. But again, this is a market, this is a bank, I should say, that is up 48% year to date. Goldman Sachs expects 9 billion euros of net profit for this lender in 2024 alone. A solid beat coming through from UniCredit. Let's check in on these markets then. Of course, the earnings story will play into the market moves as we close in on that 8 a.m. UK time open for these markets. And it was an optimistic day, a day of gains as well in the US yesterday with the Nasdaq 100 and the S&P both adding upside of a little over 1% on expectations that the Fed can go possibly 2 times in terms of the cuts coming through on the back of the softer jobs data, of course. And so you had some of the big mega cap tech names like Nvidia and Tesla performing strongly in the US session. European futures pointed to gains of 0.3%. Here in the UK, the FTSE 100 looking to add 89 points, a full 1 percentage point. Copper is interesting. We continue to keep an eye on the commodities mix. Goldman Sachs raising their outlook for the pricing around that metal. S&P futures, by the way, currently flat after the gains of yesterday. Nasdaq futures in similar territory. Let's flip the board then and look cross-asset briefly in terms of what we're seeing across the Treasury curve. Just a 1 basis point move, 481 on the 2-year. Of course, yields have been coming in lower on the back of the softer jobs data and expectations again around the repricing, the evolution of the Fed expectations, possibly 2 cuts this year. The Japanese yen, 154, a little bit of weakness coming through, down 0.3% versus the US dollar on those comments from the Fed, from the FX official that intervention is not needed if the markets are orderly. $83 a barrel on Brent as we continue to keep across the geopolitics of Gaza and Israel. Brent up 0.2%. And copper, again, above 10,000 per tonne. Goldman Sachs raising their target from 10,000 to 12,000 100,000 by the end of this year on the supply deficit. Let's cross over to Asia now, where Avril Hong is standing by with a gauge on the Asian markets. Avril, how are the markets playing out today?
They're playing out in a divergent fashion. If you take a look at Japan, South Korea, you're seeing that green. Nikkei, of course, playing catch-up after a long weekend. But in China, the equities are sliding. Hang Seng on track to snap a 10-session winning streak. That's despite positive news flow on the real estate front. Top-tier city, Shenzhen, relaxing some of these home buying restrictions. So this is a mixed bag in Asia stocks. But flip the board because I want to take you down under where we've seen a very interesting picture emerging. Investors were bracing for a hawkish RBA today. It came in less hawkish than feared. We'll, of course, find out more from the governor later this hour. But remember, this seems to be taking a leaf out of the Fed's playbook from last week. And the takeaway appears to be that we're unlikely to see a rate hike from the RBA this year. And the Australian stocks extending gains, as are the bonds. The Aussie is sliding towards 66 US cents as well. Flip the board again. I want to draw your attention to what we're seeing on dollar yen. It's been nudging towards 155. And this is as traders have been refocusing really on what we're seeing from the yield gap. And that is a level that we last saw on Thursday. Of course, we've been working on this assumption that there were 2 rounds of intervention last week. We got verbal intervention from the currency chief Kanda saying there's no need for intervention if markets behave in an orderly fashion, but that hasn't helped the currency. Of course, we are also keeping a close eye on earnings season in Japan. This week, we'll hear from the likes of Toyota and Tokyo Electron. We'll find out just how the weak yen is playing into their results. Tom.
OK, the yen back in focus today. Avril Hong in Singapore with a market check over in Asia. Thank you very much indeed. To the UBS story now. Posting a big beat, as we said, on the first quarter net income. The Swiss lender then saw net income come in at $1.7 billion, well ahead of the $600 million that had been expected. Another line crossing, by the way, just in the last minute or so from UBS. They cannot yet fully assess the capital effect from new Swiss rules. We know they have pushed back against these proposals coming through from the Swiss government in terms of their capital requirements that could cost them up to $20 billion on some calculations. Let's bring in at this point Bloomberg's Alessandro Speciale. Alessandro, top lines, what stood out to you from these numbers from UBS?
Well, it's a welcome return to profit after 2 quarters of losses. So it's a good start of the year for UBS. But at the same time, they're cautioning that the outlook for the next 2 quarters isn't going to be so strong. They are predicting a small decline. At the same time, there is this big question mark hanging over the Swiss government proposal to ask UBS to hold more capital. Could be around $20 billion, and it's still not clear how much they will do. The Swiss government has said that it will publish proposals in the first half of 2025, and until that time, even if UBS says that it has enough capital to continue its capital return plans, to give back funds to shareholders, there is a big question mark hanging on the bank's plans.
OK, so that cloud, it seems, will linger over UBS until, the first half of 2025. And as you say, as you nod to, they have reiterated that they can complete and stick to those 2024 capital return plans for this year. But again, as you say, the question mark is over 2025 still, and we expect that furious lobbying effort, no doubt, from UBS to continue. When it comes to the integration, they've reiterated they hope to get that done with Credit Suisse by the end of this month. What are the hurdles going forward then in terms of costs, in terms of integration, as we look to that process?
So UBS has always been saying that this year, that 2024, would be the hard year, would be the complicated year where all the costs would come in. The legal merger will allow to migrate clients into the UBS systems and then unlock more cost reductions, more synergies, more efficiency. But until that happens, we'll have to see how much of an impact it will have. UBS has said that in the first quarter, it has already executed $1 billion of cost reductions, and it expects $1.5 billion of more cost reductions to the end of the year. They are on track, but of course they need to keep really pushing to keep this execution, this mammoth complex execution of a merger on track.
OK, Bloomberg's Alessandra Speciale joining us out of Zurich on the back of those earnings coming through from UBS. Thank you very much indeed for the context, the important context there coming through from Alessandra and what to look for coming up. Talking of coming up, we're going to bring you a conversation. This is one you are not going to want to miss with Sergio Motti, the UBS CEO, of course, in just under an hour's time. That's 7 a.m. UK time on markets today. To geopolitics now. And Israel has rejected a ceasefire plan backed by Hamas, the country's war cabinet, saying the proposal falls far from its necessary demands. Israel is also promising to continue military operations in Rafah after warning civilians to move out of parts of that city. For more, I'm joined by Ros Matheson, Bloomberg's news director in the EMEA region. Does this rule out then, Ros, a ceasefire in its entirety? Where are we on those negotiations?
Well, it certainly makes it much more complicated. We can see the positioning that's going on by both Hamas and Israel here. Israel says it will send a delegation for further talks, but they're really wrangling over minor bits of wording, over particularly what this means for the longer term. Does this pave the way for a full end to the war? Is it called a sustainable, calm? Is the wording they're arguing over? And if they can't agree on that, they can't agree on the bigger stuff either. So we're really at a very difficult point for the prospects of a ceasefire. Meanwhile, Israel says it will continue its plans for an offensive in Rafah regardless, as it needs to do that to try and eradicate Hamas. We just got word a short time ago that troops have gone into the Rafah crossing. That's the first time Israeli troops have gone to the Rafah crossing since the war broke out. They've shut the crossing. There is no aid or people now moving through that important area. And that, of course, is a conduit for aid to go from Egypt into Gaza. So that's the cutting off of aid into Gaza at this moment. So you can see that these are really preparations going on for Israel to start its offensive in Rafah, in days, if not weeks, potentially. So either way, they're going ahead as far as they're concerned. And that's really putting the pressure on the US and others because they're running out of time to convince Israel to stand down and agree to a ceasefire.
What is the US role here then? Because President Biden has suggested in the past that this would be a red line. A significant military operation into Rafah without moving civilians would be a red line. Where does the US stand in terms of its pressure on the IDF and on Israel?
Well, US President Joe Biden spoke yet again yesterday with the Israeli Prime Minister Benjamin Netanyahu. That's like twice in a couple of days, and said to him directly, if you do a big offensive in Rafah, I would consider that a mistake. And they've been quite strong about their views on the possibility of that offensive. At the same time, they're not stopping, the supply of weapons to Israel. They've said Israel is a key strategic and military ally. Israel has the right to defend itself, to do what it needs to against Hamas. So the question is, what else can the US do aside from, calling on Israel to show restraint when it comes to civilians in that area? They're not going to cut off military aid to that country. And so, again, the question's about the level of US influence over Israel or whether it's using all the influence that it could.
OK, Ros Matheson, thank you very much indeed. Fast-moving events, of course, unfolding in that region. Ros Matheson, Bloomberg's news director in the EMEA region, giving us the latest and, of course, the context as well. Coming up on your day ahead, 6:30 a.m, back to the earnings story. Infineon, of course, the Germany-based chip maker, those earnings coming through. And we're going to be speaking to the CFO of that company, the slowdown in the auto EV market, the China exposure, all of those issues to be discussed with the CFO of Infineon, the importance, of course, of the global semiconductor market. And at 7 a.m. UK time, the focus switches to energy and the oil major that is BP, with earnings crossing from that company at 7 a.m. UK time. And then in the US, the big one, arguably stateside today, Disney, those earnings crossing later today as well. Coming up, Saudi oil giant Aramco's profits in focus ahead of first quarter results out later today. We have a preview for you next, of course, as OPEC Plus continues to constrain supply. Plus, I'm going to speak to the CEO of German defence contractor Hensoldt about the company's latest earnings and Europe's defence spending plans. That exclusive interview, 6:40 UK time. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Saudi Aramco, I should say, is set to release its first quarter results today. Analysts will be watching shareholder payouts and profit. The oil giant has lowered its production since the second quarter of last year, in line with those OPEC Plus cuts. Let's get the details then and a preview with Bloomberg's Middle East energy editor, Anthony Di Paola, who's in Dubai for us. Anthony, what is the outlook then for profit and dividends from Aramco?
Good morning, Tom. Yeah, they're looking for a slight decline in profit, probably around 10%, according to what the Bloomberg intelligence estimates are. And that's because Aramco, as you said, has had to cut production because of the OPEC Plus cuts, because of some additional voluntary cuts that they've made trying to shore up this market and avoid a buildup of stockpiles. So Aramco's down to about 9 million barrels a day of production now. And that's with oil prices relatively stable quarter on quarter between the first quarter of this year and last year. So we haven't seen much movement on the price to help that out. On the dividend, of course, though, we are expecting that payout that has been previously announced. They've got that strong regular dividend plus a special dividend that's based on the 2022 bumper profits and the earnings from last year. So that dividend is laid out. It's going to be pretty stable this year. And then looking forward, we'll be looking for some more guidance on how that dividend is going to develop. Aramco has said they hope that base dividend is going to be progressive, meaning growing over time. And it remains to be seen then how that special dividend gets factored in those future years. So we'll be looking for some guidance on that potentially as well, Tom.
OK, so that's the returning cash to shareholders element of it. When it comes to reduced production, reduced profits potentially on that front, what does that all mean for the CapEx story for Aramco then?
Yeah, CapEx is actually increasing. We've seen that cut of the plan to increase Saudi Aramco's capacity, production capacity, to 13 million barrels a day. That plan was scrapped or delayed, as Aramco would like to have it. So they're going to stick with the 12 million barrels a day capacity right now. So that frees up some CapEx to put into other projects. It looks like they're going to be putting a lot into the natural gas business there, domestic natural gas production. They've got some projects that were already underway towards that capacity increase. They'll keep those projects going, and that will make up for some of the natural decline of oil production. So we're going to be looking for CapEx to kind of see where that goes. They've forecasted some savings over the coming years by canceling that capacity increase project. So we'll be looking to see where that extra CapEx goes. A lot of the analysts are looking at that to go into the dividends to support the Saudi government spending. We've seen the Saudi government posting another consecutive deficit, so that dividend is important for shoring up those government funds, Tom.
OK, Bloomberg's Middle East energy editor, Anthony Di Paola, with a really nice setup of the earnings that we're expecting in the next couple of hours coming through from Saudi Aramco. Thank you. Coming up, could Xi Jinping's state visit to France help thaw trade tensions between China and the EU? We're going to get the latest from Paris next. The two presidents have met. This is Bloomberg.
Regarding the Palestinian-Israeli conflict, the delay of this tragedy to this day is a test of human conscience. The international community must do something. We call for an immediate, comprehensive, and sustainable ceasefire in Gaza. At the same time, support Palestine to become a full member state of the United Nations.
Chinese President Xi Jinping there, the Chinese leader, weighed in on the Israel-Gaza conflict while on a much publicised state visit to France, his first trip to Europe in 5 years, as he tries to reset ties with the EU. Let's get more then with Bloomberg's Caroline Conat, who is standing by in Paris, covering all of this for us. Caroline, has there then been any progress on the geopolitical front?
Tom, you heard President Xi calling here for a ceasefire in Gaza just as we saw some new airstrikes in the Rafah region in Gaza. So clearly not an immediate success there. But Macron also called for China's support again to try and influence the Russian President Vladimir Putin and use Beijing's influence to try and end the war in Ukraine. Xi repeated that China does not take part in this conflict, was not at the origin of the conflict, but did say they are going to start another round of mediation. However, the Chinese president also warned that the EU should not start a new Cold War with the EU and the US aligning their stance against China and Russia. In fact, Macron had also an interesting proposal, which was to call for a truce during the Paris Olympics, a global ceasefire, a proposal that was met with enthusiasm from President Xi, who said that China and France will try and work together to try and bring this ceasefire at the end of July. After Xi returns from Europe in a few days, the Russian president will actually travel to China, so we'll see whether this trip also has any influence in those discussions.
OK, so that's the geopolitics, Caroline. What about the trade tensions then between the EU and China? Have they been addressed, at least to some extent?
Not quite, but Macron was very careful not to use the same confrontational tone as the EU Commission President Ursula von der Leyen, who was also part of the initial trilateral meeting with President Xi in Paris in the morning. Ursula von der Leyen criticized China's production surplus and said the EU was ready to use all tools, all trade instruments to protect itself. President Xi immediately responded, saying that China does not have any overcapacity issue. There was another official from the Chinese Ministry of Commerce who was present in Paris yesterday, who said that the EU Commission had been sending the wrong signals with all these probes into the Chinese EV market, into the Chinese medical devices. But of course, we've seen all these trade tensions, and Macron still had a firm tone, but was using perhaps a more inclusive tone, trying to bring China back to the table of those trade negotiations, and actually reminding President Xi that the EU trade policy remains independent from the United States. So trying to distance the EU from the United States. There was no major deals, business deals announced during that trip, only a few commitments in the aviation or the cosmetics sector. But Macron did have a small victory when it comes to cognac, because as you know, the Chinese have started, as a response to the EU probe into the Chinese EV market, the Chinese have started a probe into the cognac sector that was directly targeting Paris. And during the press conference with President Xi last night, Macron said that he was hopeful the Chinese measures against cognac makers wouldn't be applied.
OK. Bloomberg's Caroline Connor in Paris. Thank you very much indeed. Now, Russia's President Vladimir Putin has ordered the military to carry out combat drills involving tactical nuclear weapons, ramping up his confrontation with the West as he prepares for a fifth term in office. The Russian leader's inauguration will take place at the Kremlin later today, extending his almost quarter-century rule for a further 6 years. Coming up, German semiconductor maker Infineon is set to report earnings in the next few minutes. I'll be joined by the company's CFO, Sven Schneider, to discuss those results. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. UBS reporting a big beat on revenue, net income and profit. The Swiss lender saying it expects the merger with Credit Suisse to be completed by the end of this month. We will speak to UBS CEO Sergio Motti in our next hour. Meanwhile, Italy's UniCredit also beats, with net income for the first quarter coming in better than expected. Stocks in Asia follow the US higher on hopes the Fed will cut rates this year. The yen weakens against the dollar after Japan's FX chief says intervention isn't needed if markets are orderly. Plus, Israel rejects a ceasefire proposal backed by Hamas hours after the militant group agreed to the plan. Israel vowing to push ahead with military operations in Rafah. On the earnings front then, a beat coming through on the banks. We now have the chip maker based in Germany, Infineon, coming through with its latest update in terms of quarterly revenue. It's a beat on the estimates for Infineon for the second quarter. Revenues coming in at 3.63 billion euros, modestly above the estimates of 3.6 billion. We'll break down some of the segments. The margin result coming through for the second quarter for this semiconductor maker coming in at 19.5%, slightly above the estimates in terms of segment margins, slightly above the estimates of just shy of 18%. So on the margin front, slightly more positive. They see the full-year revenue coming in at 14.7 billion to 15.5 billion euros. The estimates had been for 15.71 billion. So the forecast for the full year coming in slightly softer than the previous estimates. And other lines coming through, total segment profit in the second quarter coming in above the estimates of 707 million euros versus the estimates of 635 million. We know this is a challenging environment, particularly when it comes to the autos part of the business as well, the supplies to the EV makers. And we will now bring in the CFO of Sven Schneider. Very pleased to say the CFO of Infineon standing by for a reaction to these results. So a modest beat on the top line, Sven. It is a challenging market environment. Talk to us about your reaction and how this positions the company in the quarters ahead.
Yeah, Tom, good morning. Thank you for having me. You already talked about the Q2, so I will focus on Q3 and the year ahead, as you are asking. So indeed, we had to lower our yearly guidance from 16 billion to 15.1 billion. The reduction of 900 million is due to all divisions. So give or take half of the reduction is coming from automotive, where we are still growing. I repeat, we're still growing this year, but at a lower pace. The other half is coming from a weak market environment, which continues to linger in the 3Cs, communication, compute, and consumer, and also on the industrial space. So it's a combination of these end segments where we either have a weak market environment or where we have an inventory digestion, which still needs to happen at the end of the edge of the distributors and the customers. Once this is worked through, we can definitely go back to our structural growth drivers.
OK, and that's key, isn't it? Once this is worked through, and you talk about those two challenges, and as you've said, Fritz, and this is the red head across the Bloomberg terminal right now, it is that change, the adjustment lower in terms of the full-year revenue that you outlined for us, with the segment result margin outlook coming in below in terms of the forecasts for you in the business. And you talk about those two key challenges, Sven. When then? What is the timing for when you see the sales slump in the broader picture in terms of demand for semiconductors, when you see that sales slump turning around and bottoming out?
Tom, I think we need to look at it market by market and division by division. But broadly speaking, if you look at the development of our revenues, we started with 3.7. We dropped a little bit to 3.6 in the last quarter. Now, for this fiscal quarter, our fiscal Q3, we already expect a growth of 5% to 3.8. And if you then run the numbers to come to the 15.1 midpoint, it's a 4 billion, give or take, revenue line for our fiscal Q4. So you see the markets coming back, but it varies. In automotive, there is growth from the electrification, from autonomous driving, from the microcontroller business, which is very strong, where we are very happy to report that we are now globally, for the first time in the history, the #1 automotive microcontroller supplier. So there's more content per car. So this is coming, and here we strongly believe into the structural driver. On the consumer compute and communications, there are green shoots. The smartphone business, the RFS business, of course, the AI power business. This is getting back to growth rates, but for the rest, it's still a weak end market, and industrial is a late cycle, which will probably see it at the end. So it's probably towards the end of the year, maybe even beginning of next.
OK, the end of the year, the beginning of next, when you get all of those different units performing and the industrials part as well, and you outline the challenges there. On the EV segment, you say you're still seeing growth there and the number of chips and components increases. When does that materially turn around? Because there is concern that growth and sales have started to slow within the EV segment.
Yeah, I mean, Tom, there was for quite some quarters some concerns with investors who were challenging us and saying, why are you growing? Because the number of cars being produced is flat. We have shown that again and again, and even if we are now lowering the growth rate from give or take 10% to a low to mid-single digit percentage rate, there is the growth coming. So this is very strongly visible in our numbers. Secondly, yes, I acknowledge, and we know it, and we hear it, and we see also customers reacting that, especially in the Western markets, the electrification or the penetration of the electrification is decelerating. We consider that to be a transitionary effect, not a structural effect. And on top of that, for us, it's a global market. We have leading market positions in China, where it's growing strongly, in Korea, where, for example, not only BEVs, but also hybrid cars are growing strongly, same in Japan. So that's why we strongly believe into that growth pattern going forward, even if there are some markets where it's a bit slower than expected.
Sven, you recently signed a deal with Xiaomi over in China to sell them and supply them with power chips. How significant is that deal, and when do you start to see revenues coming through materially from that?
Yeah, it is a significant design win, not only in terms of revenues, but also in terms of our strength in the Chinese market. The deal, just for those who haven't seen yesterday's press release, is all about silicon carbide packages in the traction inverter, plus a lot of other products, microcontrollers, MOSFETs, and others. So it's a broad-based design win with one of the cars, which at least creates a lot of attention in these days. But secondly, it just shows how strongly we are also growing in China, but also outside China. And I can give you another data point. The design win pipeline in automotive in China has outgrown the market growth in China over the last years continuously. So there's very nice momentum.
On the China question, there's a little bit of hand-wringing in European capitals that China is going to be flooding the European market with some of those legacy chips. How valid are those concerns?
Yeah, I mean, the China competition is one we are taking very seriously. And to make it a little bit black or white, I would probably say, if you think about low power products, MOSFETs, IGBTs in our industry, to some extent, and we are benefiting from that strongly on the silicon supply side, also the silicon carbide substrate deliveries. Here, the China competition is already at a pretty good level. And they are going into these markets. On the other hand, there are these products like the microcontrollers, which is a very sticky business. There is battery management, radar systems, where there's still a huge gap between Western players and the Chinese players. And last comment I would like to make, Tom, is there are also opportunities to grow with Chinese companies outside of China. You know that one of the leading BEV companies from China just recently announced that they will build a fab in Europe. So there's also potential to supply them outside of China.
OK, Sven Schneider, the CFO of Infineon, thank you very much for your time on the back of those earnings for the second quarter, coming with a modest beat for the company, but cutting their forecast full year on a challenging market. Thank you for your time. Other earnings crossing. This is Aramco, of course, Saudi Aramco. And it's a miss for Saudi Aramco. Not a big surprise, given, of course, that production has been curtailed since the second quarter of last year, in line with those OPEC plus cuts. And in the first quarter then, for Saudi Aramco, net income coming in at 103 billion rials. The estimates had been for just shy of 106 billion. So it's a miss in terms of the net income for the first quarter. They are also saying in terms of the total revenue for the first quarter, that was also slightly above, in fact, the first quarter revenues coming in, but it's the net income that's slightly weaker. So on the profit front, a miss again for Saudi Aramco. They will pay a dividend of $31 billion US. So that's important, of course, for the Saudi government itself, which is, of course, the majority shareholder in Saudi Aramco. They will pay a $31 billion dividend. Growth in spending targets, upstream, liquids and gas. But again, it's a miss when it comes to net income from Saudi Aramco. Coming up, German defence contractor Hensoldt reports a record order backlog, thanks in part to European governments boosting defence budgets in the face of that Russian aggression. Oliver Dörre Hensoldt's CEO joins me for an exclusive conversation. That is next in the defence space. This is Bloomberg. Welcome back. Now, German defence contractor Hensoldt has reported a near doubling of its order intake compared to the previous year, a figure in line with estimates. The company says it's benefited from major orders of its advanced radar and sensor technology, which is used in everything from air defence systems, the Eurofighter jet and Germany's main battle tank, the Leopard 2. Very pleased to say, to talk about the defence space more broadly as well, in an exclusive conversation, Oliver Dörre, the CEO of Hensoldt. Oliver, thanks for joining us. And we worked through the results with you. Top line, in terms of the order backlog, it is significant. It's at a record. What are you putting in place? What measures are you putting in place specifically to address that backlog in terms of ramping up production?
Well, first of all, good morning, Tom. Really appreciate to be here. Yes, indeed, our 3M results show yet another solid performance, and it underlines that Hensoldt Group is delivering on promises. Looking at the order backlog, I can truly state that the top priority of the management, also me joining as CEO, is clearly on our ability and reliability to deliver. Our team is clear that the life and limb of the soldiers out there in a deteriorating security environment depend on us. So we have set actually three priorities. One is operational excellence. So we are scaling our production on one hand. So good example is that for the radar you've just mentioned, we scaled a five-fold increase over the past years from annual production of 3 radars to 15. So of course we are looking at our supply chain, which of course has an impact on working capital. We are building new infrastructure in Germany, all of that to really scale. And on the other hand, we're investing, of course, in the technology, digitalization, sensor fusion. That is key to stay at the top notch.
And you recently took over as CEO, around a month ago, Oliver. When you look at the backlog then, coming in with that fresh pair of eyes, what does it make you think in terms of how much capex you're prepared to put to play to address it? And where are the key sticking points in that supply chain issue?
Well, overall, I can say in the time frame of 22 to 25, we plan to invest roughly 1 billion into really the ramp up of Hensoldt. That is roughly 500 million in technology. So really looking at our R&D roadmaps, it is roughly $250 million on supply chain. So here is it really on long lead items, really keeping our supplies stable. The good thing is that we have quite a strong depth in our production, in the value chain. So we produce our chips ourselves in Ulm, in the factory. So with that, I think we have a very decent control on our supply chain. And last, I mentioned it, the last $250 million goes into infrastructure.
We are, of course, facing a multitude of geopolitical risks, whether it's Russia in Ukraine, whether it is Israel, Hamas, or whether it is indeed tensions with China. How is all of that impacting the business?
Well, as you can see from our record order intake, 665 million, and also the strong backlog, we see a structural long-term trend really in increasing defense spending. So recently, Norway has announced that they would increase 80% over the next 12 years. Germany has spent the extraordinary budget. We see that Poland is going to 4%. So all of that is really a long-term trend where we see those investments, and I think with our technology, we are really edge. We are leading in the market, so that is giving a strong growth perspective.
Yeah, and you talk about that European defence spending, particularly, of course, coming through from Germany, your home country. Do you think the prospect, Oliver, of another Trump presidency in the US is another wake-up call for Europe in terms of getting its act together on defence?
Well, truly, this is one element, but Germany keeps a strong allies and also a strong transatlantic relation. So me, myself, I did my military training in the US. So with that regards, we still have close ties. But indeed, I think Europe really has to invest in its independence, looking at European security and defense capabilities. And that is what we see at the moment. And here, of course, Hensoldt, as a national champion, also with an anchor shareholder of the German government, is clearly one player on that scene.
There's been a roundup of alleged Russian and Chinese spies across Europe in the last few weeks. Presumably a company like yours is targeted by espionage operations. Have you seen a tick-up in espionage attempts targeting your business?
Well, Hensoldt is really also internally looking at the technology and everything, having very high security standards. So I can't see that at the moment. However, also, as you know, one of our segments besides radar, optronic, is electromagnetic warfare, cyber. So also here, of course, we use our capacities that we sell to customers also to internally secure our company, our IPRs and everything. So with that regards, I think we're also strongly positioned.
OK. Oliver Dörre, CEO of Hensoldt, thank you very much indeed on that record order backlog. We appreciate it. Plenty more coming up. This is Bloomberg.
For me, it's really looking at the totality of the data, not just looking at an employment report or a CPI or other piece of information. You really want to make sure we're looking at the broad picture. We have the maximum employment and price stability goals. So we want to, from my perspective, see all the data and information that speaks to all of that. And really, as the data, come in, hopefully we'll be moving in the direction we want to see, both on inflation and in terms of restoring balance to the economy. And then we'll make our decisions based on that.
And that was, of course, New York Fed President John Williams on his expectations as to where the Fed goes from here. On the earnings stories, beats coming through from UniCredit, but UBS as well, front and centre for us, dropping at 5:45 UK time. And it was a beat in terms of the first quarter on net income, on profit, on revenue. And, of course, we were looking for lines in terms of whether or not they can continue to return that capital to shareholders amid that discussion from the Swiss government about those capital requirements. UBS says they can continue to meet those expectations for 2024. By the way, in terms of the costs, they expect another $1.5 billion worth of cost savings by the end of this year, and they expect that merger of UBS and Credit Suisse to complete by the end of this month, May 31st. The line coming through in terms of the capital effects, they can't yet fully assess the capital effect from new Swiss rules. And our reporter on the ground in Zurich telling us that it's going to come through, the detail likely at the end of this year or the first part of 2025 in terms of those government plans. The expectation is that if they are put into force, those capital requirements, it could cost UBS up to $20 billion. We're going to be speaking, by the way, with the CEO, of course, of UBS, Sergio Amotti, in just a few minutes. 7 a.m. UK time on Markets Today. He will, of course, have been quizzed, and we will be quizzed on all of those issues around the capital story, whether or not there's going to be further pushback from the CEO. We'd expect it would. But again, top line, it was a beat from UBS. That conversation in the next couple of minutes. Markets Today is next as well, across all of the issues filtering through the various asset classes. This is Bloomberg.